My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people are my friends, just trying to make you some money. My job is not just to entertain you, but to educate and teach you, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. As we get closer to a vaccine, this market's increasingly dominated by one question. What's the post-COVID future going to look like? After today, we had some natural profit taking after that big rally yesterday. We had the Dow dipping 131 points, S&P backsliding 0.48%, NASDAQ edging down just 0.29%. This is a good moment to consider where we will be in 6 months because it's controlling a lot of the action we see in the stock market. So the question is, will we go back to the old normal once the pandemic is over, or will some aspects of the new normal remain? I think many of these changes will be ephemeral, but some could be permanent, real ingrained habits. And right now, Wall Street's trying to guess which is which. Remember, the market's a forecasting machine that reflects expectations about the future much more than facts about the present. That's why I always say we don't care where stocks have been, we care where they're going. So what's the market saying about the post-pandemic economy? Well, let's start with the obvious one that many missed. Peloton. I'm getting right to it. It's incredible how many smart people bet against this maker of smart exercise machines. When COVID first hit, money managers quickly figured out that their gyms and their spin classes were kaput. But a lot of short sellers still tried to crush Peloton, holding it in the 30s, assuming it was just a stationary bike with a video screen. As time went on, though, gym chain after gym chain filed for bankruptcy. Final straw 2 weeks ago. Flywheel. Bankruptcy. And Peloton stock has soared to the stratosphere. The company's clearly here to stay, and it's expanding its offerings to ensure the competition stays dead. I actually know people who got in early when they still had a lot of inventory, and they brag about it. Why not? Not anymore. The verdict! The market's screaming that Peloton is the real deal. Next up, the pandemic's taught a whole new generation how to cook at home because it's not really safe to dine out. You'd think that would mean great things for the packaged food companies. And they're absolutely putting up fantastic numbers. But the stocks keep getting clobbered because the market thinks they have no post-pandemic staying power, that we're just going to go out like we used to. Witness today's beatdown with McCormick, the spice maker that we'll hear about later tonight. Do you know that investors made the same judgment about Campbell's Soup? We had them one too. Somehow, get this. Those same investors like the web, digitization. They believe that Pinterest, the virtual pinboard platform that's full of recipes, is totally real. I think the market's making a little bit of misjudgment here. We shouldn't be writing off the food stocks. When Campbell's works out the supply chain, I bet the buyers will come back. The cash flow is huge. As for McCormick, they're still not getting enough credit for Frank's hot sauce, let alone French's mustard. More on that later. But that's just my opinion, though. The market's opinion, the packaged food players, no staying power. How about the home office? Right, when you're stuck at home thanks to COVID, you spend a lot of money trying to make it a nicer place to live and to work. Hence the spectacular rally at Wayfair, the online furniture store. This once struggling company was saved by the pandemic. Do you know in February, Valentine's Day, Wayfair was teetering on the edge. They laid off 550 people, CEO telling his employees that the business had invested too heavily. A few weeks later, COVID, and all those investments began to pay off, and the stock surged, get this, from 21 to over 300. While Wayfair's pulled back more than 15% from its highs, it's still trading like it's got staying power. Once you start buying a given type of merchandise online, it is tough to go back. Wayfair's a bargain furniture play, though. What if you had got deep pockets? Well, then you go to RH, the company formerly known as Restoration Hardware, which has been cleaning up these past 6 months. CEO Gary Friedman, always on the show, has knocked the ball out of the park. Even after the stock's magnificent run, I'm shocked that it only has a $7.3 billion market cap when RH is $2.6 billion in sales, headed to $5 billion. I think it's got a lot more upside, and Wall Street clearly agrees because this stock is trading like the growth is here to stay. It's on the here to stay side. Next up, the great outdoors. Brunswick's basically out of boats with giant back orders. They're trying to make them as fast as they can. Amazing number of new boaters, especially women. I think it's the ideal way to have fun during the pandemic. Don't ask me, ask my 17-foot Boston Whaler. Doesn't matter. Wall Street's decided it's got no staying power. Investors simply don't believe the growth can be maintained. I think they're dead wrong. This industry is expanding. The number of new boaters is amazing, and a boat's a great investment. You can rent them out for ridiculous prices right now. But there's no argument with Wall Street's verdict, at least for the moment. Next up, cars. With people terrified of public transportation or carpooling, commuters are turning to used car dealers to get around. But not just any dealers. Who do they love? Carvana. Because even before COVID, Carvana had a contactless business model with giant garages that are basically vending machines for used cars. You didn't have to talk to anybody. People don't like to talk anymore. Remember? That younger generation, they text. I wish they'd call me. Despite heavy short interest, the stock continues to roar. The verdict? Staying power for Carvana. Off-road vehicles. Jury's still out. We're going to speak to Polaris tonight, PII. They just signed a deal to make electric snowmobiles and off-road vehicles. I thought it would put it over in the here-to-stay side. I don't know. I question the market's judgment, just like with Brunswick. ATVs aren't going out of style. They're coming into style. How about the upcoming Airbnb IPO? Now, the company laid off a quarter of its workforce in May, and it looked like they were toast. Who wants to stay in someone else's house during a pandemic? Turns out the answer is pretty much everyone who has to travel. Nobody trusts the hotels here. And you can rent out a fabulous house through Airbnb for the same price as a much smaller hotel room. You get there. What do? You clean the darn place with the mad money? No, with disinfecting wipes. This is what you use, for heaven's sake. Stay focused. In fact, tons of people who are working remotely have decided to decamp to an Airbnb all over the country because why not? Might as well be somewhere nice. Hey, you know what? My wife's doing it. What is she doing? She's going to Florida, packing these to avoid a resurgence. She's going to Delray. It's supposed to be a nice place. How about RVs? All right, as you'll hear later, the largest RV maker, Thor Industries, THO, reported some incredible numbers yesterday. Best backlog and leanest inventories ever. RVs have become the safest way to travel with your family. But judging by the humdrum action in the stock, the market's decided no staying power. No staying power. This is staying power, no staying power. I say let's reserve judgment, please, until we hear what management has to say. All right, well, let's just talk about buy a claim, Domino's. That's transformed the way we eat. Order online or on any device, contactless delivery. They put it on a little pedestal on your stairs, so you don't even have to talk to anybody. And you can, by the way, you can put the tip right on the thing. You can order with your watch, and they are developing better wings, thank heavens. I think this is another last man standing situation, stocks so far, which is the market's way of saying Domino's, staying power. Finally, Facebook, Etsy, and Shopify. They're all about empowering small businesses to operate online. Facebook is Instagram Shops. You know that could be worth $50 billion to them. Shopify is the most aggressive e-commerce facilitator for small business. Etsy is the online marketplace for all sorts of handcrafted goods. They're all hanging in there because the market believes in these stories, and I agree. Look, it's hard to know what really has staying power unless you're convinced that the pandemic's headed for a huge resurgence that will send us back into recession. That could explain why the market's turned against many of these stories. That's why this one is here, but it's also there. That's a statistical oddity. The bottom line, I would appeal all of the guilty judgments, but the upper courts may be unyielding. If the market's turned against your favorite COVID names, you can't expect them to come back shortly. Longer term, though, the jury's still out, and that could be the opportunity.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.